One thing I promise you is I'll be short. I'm not going to get into the details of what the Capital Markets Authority is. We've covered that, and many of the faces around the table here are familiar today. So I'll go straight to the relation between the capital markets and the economic growth or the economic performance of a country. It's a choice. It's okay. I'm prepared in English. I have some technical words, if you don't mind. لكمل بس اللي عملته. If we look at the technical analysis of a financial system, we have two types of financial systems. We have the bank-led market and the bank-led system and the market-led system. Bank-led, which relies on loans from banks, and the market-led system, which relies on the capital markets for raising funds. Now, the question of how does the type of market system differ in terms of its impact on the economy has been a question that's been debated for the past 30 or 40 years with economists and financial scholars. And there are different various opinions on that. However, post-2008 crisis, the market-led countries, market-led system countries, such as the US and the UK, have demonstrated a threefold recovery process than bank-led systems such as the EU. In fact, EU countries today are switching from a bank-led system to a market-led system. They're switching, number of banks are being reduced, number of branches are being reduced, and there's more focus on the market-led system. And they're trying now with the EU to strike a balance between a bank-led and a market-led. What's most important fact today is the study that came out in 2014 by two German financial professors, Kasser and Rapp. The study demonstrated, and the data showed, that a 1/3 increase in the capital markets or the stock market will lead to a long-term GDP per capita growth of 20%. The relation is 1-to-1. Let's freeze that picture for a moment there, and let's go back to the landscape of the Lebanese market. The Lebanese financial system market is nowhere to be seen. It's a purely bank-led system, considering the numbers. And if the professors, Kasser and Rapp, are half true of what they have given in terms of data, I think we have a big incentive here today to try and shift the market from a purely bank-led market into a market-led system, from a bank-led system into a market-led system. We need to look at the capital markets for GDP growth. And I go back to Dr. Munir Rashid's point that one of the things that we need to do is reduce the amount of debt to GDP. We have a government, several governments that are addicted to debt. Access to debt is and will be difficult as we move forward. In fact, today, we are not offering the best rates in the region. You have countries like Iran who's just opened up and they're offering 20%. Eventually, it's going to start to be difficult for the market to raise money as easy as it is today. This is why we need to shift. If we can't reduce the debt or our appetite towards the debt, let's increase the GDP. And if capital markets relation to GDP is 1-to-1, then I think we need to start looking at the capital markets. How can a government look at the capital markets, and what can the government do to enlarge this capital market? To start with, I think the government needs to start divesting. We have, for example, 2 telecom operators that gives us an EBITDA or earnings of 1 billion each. If we're looking at a value which is low value of 5 times the revenue, we're looking at a $10 billion value. If 30% of those telecom companies are listed through the PPP law, which has been launched on the stock exchange will grow by 30%. We have a big opportunity to grow the stock market. And should Kasser and Rapp theory or facts finding proves that a 1/3 increase of capital market will increase per capita GDP, I don't understand why we don't do it. They have all the incentive to do that. Secondly, the government should look at tax incentives. They need to look at tax incentives to promote capital markets. Third, we need to start looking at pension funds. We need to start looking at investing within the National Social Security Fund. The capital markets is there. Now, what is the CMA doing? That's the government's job. The CMA, what we're doing today, we have created the regulatory infrastructure to make the capital market as solid as any capital market in the region. In fact, we're joining IOSCO within the next few weeks, and joining IOSCO is a testament to the quality of regulations that we're launching in the market. We worked with the World Bank, and we've finalized all our regulations. So we've laid down the grounds to have a capital markets, and every regulation that we've written is seen through the lens of protecting the investor, through the investor's eyes. Our main goal is to protect the investor. We don't protect the investor by choosing his investment, but by rather creating the regulatory system to allow certain protections in terms of disclosures and the market conduct and business conduct and even the product being offered. We supervise and regulate that as well. The second thing that we will be doing, which is mandated by law, is that the government should privatize the Beirut Stock Exchange. The good news is the government and the current Minister of Finance has submitted to the cabinet the decision to switch the Beirut Stock Exchange from a government institution to a joint stock company, which is the first step to privatizing it. And we're in the, hopefully, final stages of doing that. Within next week, the minister will receive our proposal from the CMA and will be submitted on the cabinet agenda, hopefully in the next one. So once the Beirut Stock Exchange is privatized, we're creating within that an electronic trading platform as well as a secondary trading market for SMEs and startups. So what the CMA is doing is we're laying the grounds. The government needs to do their job in helping us, trying to promote the capital markets. And the government has all the incentive in the world to do that because capital markets are directly linked to economic growth.